We're going to get started. This is our last meeting before tax season. So the next meeting won't be until sometime in May. And at that point...
After extensions.
After extensions, yeah.
How about when they come back? When they stop?
Yeah, that'll be in May. But starting May, Buy-in is going to be chairing the committee. So he'll be running the meetings from then on. My 2-year term is up, so I just want to thank everybody. It's been it's been fun. It's been fun doing this, and I enjoyed it. So, but this is the last meeting until May. So anyway, having said that, today we're going to have a couple of updates. I know Howard had a. And then we were supposed to have a speaker, believe it or not, from the IRS. I had scheduled that before sometime in December, and they called me. Actually, they gave me some notice. They called me probably before Christmas and said, depending upon what happens, we may not be able to come out. And then they confirmed that, so they were unable to come. But I think we got a better deal. We have from one of my partners, Walter Pagano, who's a former IRS appeals officer, is going to speak to us about a number of different topics. He's going to cover a little bit of cryptocurrency, a little bit of the future of the profession, and some other things, maybe a little bit about the government shutdown. Having said that, Nicole, do you want to give your...
2-second spiel?
You want to give your update?
All right. Very, very short and sweet today. Happy New Year, everyone. So January 28th, so they say, is the kickoff of tax season. The IRS is supposed to be accepting tax returns Monday, January 28th. So yes, yay for that, I guess. It's official. The refunds are to be issued despite the lapse in the annual appropriations and despite, obviously, the shutdown, which we're all very well aware of. They intend to recall a significant portion of its workforce to work, so we'll see what happens there to process the returns. Due dates for most individual taxpayers is actually April 15th this year. It's not April 16th or April 17th, so I'm kind of happy about that. Hopefully this will not be extended because of the shutdown. Obviously there's been a little chatter about that, but I'm hopeful that it won't be. Patriots Day is a legal holiday in Maine and Massachusetts. That falls on April 15th, so since it's a legal holiday there, and Emancipation Day is that Tuesday, the 4/16. Due dates for Maine and Massachusetts returns is actually April 17th. So for the majority of us, it's April 15th, but for Maine and Mass, it is April 17th. Tax amnesty, I'm sure we've all seen the billboards driving down the highway or the TV ads. I honestly am curious how much money, once they factor in all the advertising expenses, how much they're going to actually bring in. But that ends on January 15th. And it applies again to all outstanding tax filings or payments that are due on or after February 1st, 2009 and prior to September 1st, 2017. Waived penalties and 1/2 of the balance of interest is due as of November 11, 2018. So that's it. That's all I have.
Thanks, Nicole.
Yep.
Howard, the floor is yours.
I don't have anything to cover.
Howard even wore a suit for us.
All right, what I want to discuss and tell you about, number one, the partnership form has new questions. Number 23 and 24, 25, 26 are new questions on the 1065. The instructions came down yesterday. My suggestion is you download them and start looking and reviewing them. The Form 8990, you remember the Paperwork Reduction Act of 82? Forget about it. All right, Form 8990 deals with business interest and has to be completed if you have a client that has business interest deduction on their forms. The Form 1099-C, if your client gets one, make sure they don't ignore it. The penalties are horrendous, okay? They may not think it's important. You tell them if they get a 1099-C or A, you want to know about it ASAP.
What's that for?
Because we don't know, the extender hasn't been extended yet with the 982 and the $2 million of household offset. But this is, if you have people with credit cards, this particular case was credit cards, and the person determined, oh, well, I was insolvent, so I'm not going to file. And it cost a couple of bucks extra because he took that attitude. Number 3, how many people are ready for questions from your client because they have certain expectations?
My refund?
Expectation number 1, why ain't I getting a refund? Number 2, I thought it was only 2 pages. How come you're billing me so much money? I thought my fee would go down. The client does not know. I'm not talking about your business clients. I'm talking about the 1040 clients that will be coming to your office or being interviewed by you, whatever the case may be. They have expectations. I can take off my gambling losses, yes, if you itemize. If you don't itemize, say goodbye. The income is taxable. Mortgage interest, it's going to have a date that the mortgage was originated, and if it's a 2018 date, you have to be aware of the 2018 interest deduction rules. Entertainment, thank you very much for the tickets to the hockey game, okay, but they're not deductible. The expectations of the client are going to take time to explain. The extra time to filling out forms is going to take a lot of extra time. The estimation is a minimum return will be 2 hours. Now I know I'm talking to the top of the cream. We have a lot of people, based upon everything that's on Connect, who are in fog as to what's going on in this profession. Tax returns, when the people come in to give you information or get a tax return prepared, you have to be prepared to tell them, I'm here to give you advice. The preparation is secondary. And they've got to pay for advice. How many people took at least 2 or 3 courses on 199A? Did that cost you money? Should somebody be billed for that? Thank you very much. Okay? That's some of the problems that we're going to have this tax season. They believe it's supposed to be easier this year to prepare a tax return. I have to tell one of my clients who paid a bulk fee of $217,000 because they sold their property, and the deduction on her 1040 Schedule A is only $10,000. I don't know how to tell the client that the other $207,000 is, I'll send it to Mike's office. Okay?
I'll just lose them.
It's not going to be easy to tell people about that information. January 31st, 2019. All 1099 Box 7 miscellaneous returns separately filed with a 1096 must be filed by January 31st. There is no extension. All other 1099s separately filed can be filed by the end of February. W-2s, there is no extension. January 31st is when the W-2s are due. the 1099s, attorneys from ground zero get 1099s. LLCs get 1099s. Partnerships get 1099s. The only one exempt? Corporation. C, corporation, or 1120S. Mr. Senator Biden has asked for penalties to be reduced or eliminated from the IRS for failure to have the proper withholding. I think his plea may have fallen on deaf ears because everybody's shut down. But I will tell you, according to my sources, the IRS has the letters already in the chute, ready to go. They're ready to penalize. Your clients have been told nothing by the press. I have never seen where the press, since December 22nd of 2017, has had no coverage of the tax law. At one time, the newspapers used to have a financial section, and they would talk about taxes. They'd interview CPAs or PAs or somebody. I didn't see it this last year. So your client has no clue as to what your job is and what you will be doing. There's a new e-filing edict in the state of New Jersey, not New York. If you have a return that you did today, I don't know how you're going to do it, but never mind. If you have a return that you did today, you sent out the 8879, today is the 9th. 10 days from now is the 19th. The client doesn't send back the 8879. When you go to file that return, if they send it back after 10 days, the return will be rejected by the software. If there was a change in the program by the software company, New Jersey will not accept the return. So if you did it under version 2.4, and when the client sends back the 8879, you didn't rerun it through version 2.5, your return will be rejected. That's going to be done electronically. So I don't know what the code is, but you will get a rejection on that return. Ladies and gentlemen, we are going to have a 45-day tax season. Now, I don't care if you have 100 clients or 200 clients. 45 days is not a lot of time. Yeah, I know, Mike, you get an extension. But seriously,
Not really.
you don't want an extension. Your wife told me.
Oh.
All right. Seriously, there's going to be a lot of pressure, a lot of time consumed in doing administration. Has anyone looked at the 8867?
What's that?
That comes after 8866.
They added like some stuff.
14.
Good stuff.
Yes.
The only problem with the stuff is that there's a new question about head of household, number one. Number two, if you pay all the penalties that would be due for failure to do it properly, the penalties come out to $41,600. The 8867 asks you very pointed questions, as it has in the past, but now it gets filed with the return, and you have to have documentation. Or you have to really know the client and make some kind of a notation somewhere. You have to ask for the 1099-T. Without the 1099-T, do not file the form.
1098.
1098-T, I'm sorry. Independent contractors are going to be a problem. How many people have heard of AI?
Artificial intelligence?
Oh,
No,
you're so
that's-
smart.
That comes with paprika? No. AI,
Ellen Iverson.
artificial intelligence. It's bad enough when we had to deal with intelligence, now we gotta deal with artificial intelligence.
That's always been artificial.
The IRS already has programmed, if there's a change in the W-2 income and all of a sudden there's a Schedule C, and last year they had a Schedule A, that return will be pulled out of line and looked at. So, and they have notices already printed, ready to go out. It's a combination of some logarithms. I'm not a mathematical genius, I don't know the answer, but they have ways of knowing that something is wrong. If the entertainment expense went down and all of a sudden advertising went up, that's also part of the AI. So just be aware of these changes. All hobby loss expenses are no longer deductible as they were miscellaneous itemized deductions which have been eliminated. Casualty and theft losses surrounding an activity not engaged in for profit are non-deductible. So if somebody had a loss of a car or something of that particular nature, casualty losses are out.
Unless you're in a federally declared disaster area.
Federal, yeah.
We got a lot of those.
Yeah.
This is, how many people remember the 86 Tax Act?
Oh.
Okay, what we went through, and that was only a rate change, basically. This is gonna be worse.
Nicole remembers it very
I
well.
was one.
Yeah.
Thanks
no
for rubbing it in.
This tax season will be worse. Administrative time spent in your office on a client is gonna be increased. And you have to, and the other thing is that this came out of a roundtable in Washington. Don't expect to bill by the hour. You have to bill by what you're really worth. You've paid for CPE courses, you've paid for training. You've taken a lot of courses in the last 6 months. Somehow you gotta get paid back for that. Yes?
I'm sorry, two things. First, you had mentioned about New Jersey rejecting returns if they're filed late. Is that all returns,
Not for their
No,
family.
1040s.
just 1040s? Okay, now, also, I had read that, that New Jersey is now requiring the CBTs to be e-filed. Do you know anything about that? Or can you comment on that?
It's on extension, automatically, February 15th.
But, no, you always had a family.
Yeah, but everybody with July, August, September year ends, okay, are extended to February 15th automatically. Don't send in any forms, they can't handle it.
And Governor
As
Murphy.
soon as I hear from the director's office, I'm on direct communication. As soon as I hear, it will be on the web. Yes?
July, you're right.
Howard, just to clarify what you said in the question, with the IRS, it's an IRS mandate, the 10 days, not New Jersey.
That's state of New Jersey. New York did not adopt it, only the state of New Jersey.
IRS just announced the other day that they've adopted. What they said is that if there's an update to your software and you do not load it into your system, it will not process a electronic filing 10 days after the update is available. But if you update the software,
Then you have to rerun, take the return
You
out,
have to
out of the
rerun
queue and put it back.
Just rerun it. If you get the same answer, the 8879 is still good. That the client sends you 10 days later. But the software will not allow you to e-file if there's been an update to the system within 10 days or more ago.
Right.
That's
So if your client is sitting on the 8879, you may have a problem.
well, if you don't update your software, you have a problem. That's the key. And most software is like automatically. But if you get those things that say software is available and you say ignore,
Ken,
that won't work anymore.
Ken, you and I have been practicing a couple of weeks.
Yeah.
We're not
You a
talking,
little bit longer than me, but that's.
we're not talking to the choir.
Yeah.
No, that's
Okay.
not his point. The point is, if you e-file the Jersey return, now that's gone there. But now when you try and get the 8879 and put that in there, that is outdated. You gotta go back into your 1040, do the update, whether you've done it or not.
Right.
The one that's sitting there is outdated.
Well, yeah,
So
but.
you have to go back and update it, and then you can.
You gotta take it out of the queue
Yeah,
and
but-
put it back.
Right.
Yeah, but my point is that if there's no change to tax calculation.
If there's no change, there's no
the
problem.
8879 that you have is still good.
Oh, yeah, that's still
It just
good,
won't let
sure.
you e-file it.
But Ken,
Yeah.
we have people out there that don't update their program every day.
That's the problem, that's what the IRS is avoiding.
I can't answer for that, neither can you.
Right.
Yes?
But I think he said also the IRS is following the same format as New Jersey.
It's strictly, there are several states that signed on to this. New Jersey is one of them. New York did not sign on.
Right.
Okay, so I'm just letting you know that that's that. The other thing is, DOL is doing wage and hour audits. Number two, DOL has passed, the governor has signed a law, okay, that you have to accrue sick pay, and the benefit year started October 29, 2017. And for those employees presently employed, that's the start of their base year, which goes to September 30th, whatever it is, in 19. Just be aware of it, but you better tell your small employer, a doctor who has a nurse, one part-time nurse, whatever, part-time, full-time, they're all covered with this law. The other thing is, when you speak to your client, they may be able to bypass the federal penalty for health insurance, but they're not going to bypass the state of New Jersey, which began 1/1 of 19. Okay? Be very, very careful this tax season, and you're going to have to spend a lot of extra time. If you have any questions, I'm free to answer them. I'll be very happy to. This has been growing every single day. Okay, and I just came from a firm that I spoke to in Morristown. They hadn't even seen the new 1065, okay, in any form. But it's out now with the instructions and the changes, the questions have changed. So all I can say to you is, happy tax season, do a lot of reading. Thank you.
And drinking.
Thank you, Howard. Thanks, Nicole. Next section, we're going to have, like I said, my partner Walter Pagano is going to talk about a number of different things pertaining to the IRS. He's going to talk a little bit about, I think, cryptocurrency and some other initiatives. Thanks, Paul.
Just a few opening comments, folks. My world is primarily tax controversy, litigation, and forensic, and most of my controversy is probably split between civil and criminal. And I would say about 80% of my practice is generated from referral sources, generally attorneys, outside of our Eisner-Amper client base. So I see a fair amount of issues that come up both in the civil context with respect to controversy as well as the criminal. And I just wanted to share that background with you as well. So I am not on the compliance side, although fortunately the compliance issues come up quite often in my cases, so I obviously deal with them and stay on top of matters that are essentially older issues compared to TCJA, which are going to be the compliance issues for this tax season. And just a couple of notes. I took a couple of notes based on what Nicole was saying and also Howard. I just want to comment on a few things because I think they're probably relevant, at least in terms of some of the issues that have been spoken about. With respect to the amnesty, the one thing that I'd like to speak about is that yesterday I had two conversations regarding clients, not Eisner-Amper clients, but clients that are contemplating going into or entering into the amnesty program. And the question came up with respect to them as well as their defense counsel. What are the collateral consequences with respect to entering into amnesty if a client A is under criminal investigation, or B, that the client has already pled to a felony? And there are two cases that I presently have been working on. And the thing I just want to point out to you, even at this late date, if there's any question whatsoever about a client entering into amnesty because of the potential collateral consequences that those returns, the amended returns, may in fact constitute admissions that would be detrimental to the client with respect to what's going on, say, with, I have a case with the District Attorney's Office in New York, as well as an IRS criminal case. If there's any concern whatsoever, the client certainly should consult with competent legal counsel to make sure that if there are any potential exposures with respect to an admission, and there's some overarching issue, whether it be DA's office or another state, their clients under criminal investigation, or the IRS, certainly that needs to be weighed as a risk assessment. And ultimately, as we know as practitioners, it's really the client's responsibility, and the client's going to make that decision. The only thing we could do, for example, if we're assisting counsel, is to provide the options, and quite frankly, that's what the lawyer would do with respect to his or her client. So I want to share that with you because I think that's important. And the other thing about the amnesty program, some of you may already know this, but it's worth repeating, is that there is an agreement between IRS and the state of New Jersey that with respect to any returns that are filed under amnesty, at some point that information, don't know what that information will be, but I'm assuming it's name, address, social security number, and maybe some other aspects, that information will be shared with the service. So there are issues there that relate to whether or not a client, A, should actually file amnesty, and the question ultimately is, are there any collateral consequences that they need to be concerned about? So I want to share that with you because that's certainly top of mind based on a couple of conversations I had yesterday. Another area, and Howard mentioned it with respect to the shutdown, just a couple of issues about the shutdown. I had a couple of calls yesterday, one from one of our partners and another call from an attorney. And the question really had to do with one of our clients, one of an Eisner-Amper client, is being audited, the typical audit. And the question is, gee, Walter, we can't get in touch with the revenue agent because of the shutdown. What do we do? Well, you can't even file a POA, as Nicole had already mentioned, right? So my recommendation is prepare a letter, attach the appointment letter, the notice of the audit to your letter, send it to the revenue agent, and make a record of the fact that you made contact.
Cool.
They don't answer at times. They don't answer.
Their voice Audex will pick it up.
That may be, but I feel in writing is obviously...
No, definitely in writing,
to
but I'm
make a
just
record.
saying.
And if they do
in
call, that's
addition,
fine.
yeah.
If they do call, that's fine, Howard. So make a record. And also, with respect to the attorney who called me, Walter, we have a notice of intent to levy. And the expiration date is, say, maybe sometime next week. Can't get in touch with the RO. What do we do? Basically the same thing, although I did suggest, does this particular letter call for a CDP, collection due process? You may want to consider that. But at the very least, communicate in writing, make a record, so at least you've done the best you can in terms of our own due diligence and our own duty to our client. A couple of other things. You know, Howard was talking about the due diligence with respect to the new head of household provision in TCJA. There are a couple of issues there that I think are worthwhile to at least think about. There is a requirement, as you folks know, in Circular 230 dealing with due diligence. It's section 10.22. And I think with respect to what Howard's suggesting, that in terms of making sure those forms, or that form is complete as to whether it's earned income credit or one of those other credits or the head of household, that you have to make a record for ourselves that those questions were asked of the client. I would not just assume, because I don't think that's the right thing to do. And again, I'm thinking of it from a controversy point of view, because many of the cases I have ultimately then roll into defending a CPA firm. in terms of our standards, whether they be statement on standards for tax services, whether they be our general standards, or whether they be Circular 230, or Board of Accountancy, and so on. So I think it's important to at least ensure that whatever due diligence is necessary for that form, that it's not just a checklist, because it could come back to haunt you. And the reason why I say that is there is going to be a program going forward with respect to Section 6694, the prepare penalty, that will include the point that Howard made about due diligence with respect to 8867. So I think that's also just something else, a word to the wise. I think it's important for us to document. No different than, even to this day, although the program has terminated, now we have a new program that I'm going to speak about regarding the new voluntary disclosure program. But even insofar as asking the clients, do you have an offshore account? And if so, what are your assets? And if you do, where are they? And so on and so forth.
Well,
Because
you give them with Google in their $230 billion that they didn't report.
that too, right?
It's in Bermuda,
It's definitely in Bermuda or someplace else.
but they call it Bermuda Shorts.
Oh, is that right? Okay, so anyway, you get the point about these particular items. So I think it's important, just as an overview, based on what Howard and Nicole said. One last thing, and I'm going to speak about it briefly in a little while regarding the future of the tax function, basically, and the future of the tax professional. And how I came across this issue is, although the conference has been postponed because of the shutdown, but toward the end of this month, I was scheduled, as well as with one of our managing partners, Chris Loitana, to make presentations at Sacred Heart University in Fairfield, Connecticut.
23rd. 23rd.
It was the 25th. It's canceled.
20, canceled?
Yeah. The reason why it was canceled is because of the shutdown. And there we've gotten pretty much immersed in, especially from Chris's perspective, on the future of the accounting profession, because that's the topic of this program. And my job was, with respect to my presentation, to talk about the tax function. So we're going to touch on that a little bit because I think it's important. So at least whether it's you folks are involved, your children, grandchildren, whatever it might be, if they have any interest in our profession, as we know, it's a brave new world right now, and it's a totally new
It's only a
world.
2-page form. What's the matter with you?
That never happened. So anyway, the issue with respect to our work, I'm certainly a strong proponent of a tax return is essentially just like an audited financial statement. Right? A tax return is fungible, meaning you can shop around and buy one. You can shop, I don't mean in a negative sense. I mean you can go to another accounting firm and say, what are you going to charge for this audit? What are you going to charge for this 1040, this 1120, and so on and so forth. But to the point that Howard made a little while ago is, look, in addition to the fact that we've spent money for CPE and things like that, remember, advisory roles certainly, I think, contain a premium, or should have a premium, versus basically just the input function. And I don't say that in a way where you don't know the tax law, but there are younger staff that may not really have an appreciation for the nuances of particular code sections. So that oftentimes they take the opportunity just to input data, and really without even thinking about what the relevance is of that particular issue, or the limitations, or whether there are other issues that then follow that. So again, just from the point of view of our value to clients, our value is not necessarily in preparing a return only, because quite frankly, client can go just about any place to have a return prepared. But I think it's the advisory, it's the value that you provide with respect to the issues that are important for us to communicate to that particular client. I mean, I do it in the controversy context, in the litigation context, and I think in the compliant context, especially where you have the relationships with the clients and we are their trusted advisors. I think it's important to make sure that they at least have an appreciation, and maybe this expectation gap that needs to be bridged a little bit closer, that the clients actually have a better understanding of exactly what's involved and what you're asked to do in terms of preparing a particular tax return. So I just share those brief comments with you on that. So again, the issue with the amnesty, I think that's pretty clear, and certainly we should just keep that in mind, as well as with the shutdown. And from what I understand, there's no end in sight. So at least, and I'm just reading the public reports the way you folks are as well. But generally, if you can't even fax in a power of attorney anymore because the e-file system is literally down, it's not inoperable, who knows how long this will last. So anyway, and if there's any, any questions come up while I'm addressing some of these other issues, certainly feel free to ask me. Certainly, if I can answer the question, I will. If I don't know the answer, I'll find it for you and get back to you. Another question that came up yesterday. Again, this is part of my world. Question was, a company is behind in its trust fund payments. So there's a 6672 issue dealing with responsible officer. Well, it so happens that in this particular context, in this particular situation, there are 2 members of the board of directors that are associated with a related company, but they're on the board of the company that owes $500,000 for failure to remit trust fund. That's a lot of money. So the question came up as well, do these members, these board members, do they have potential liability with respect to the trust fund money? They're on the board of that particular company, but the question is whether they have potential liability. And if you go through section 6672, there's an exception toward the bottom of the statute that basically says, if you are a board member of an exempt organization and you volunteer, you don't pay, you don't get paid, I should say, you're not compensated, you are not actively involved in the financial aspects of the company or its operations, and you have no actual knowledge of, of the trust fund issue. As a board member, with respect to a not-for-profit, you're okay, right? The question then comes up is, what if it's a what if it is for-profit, and of course these board members are on the board? The question is, do they have potential liability? It's the same default. Do they have actual knowledge? Are they involved in the financial operations of that particular entity? And do they in any way, shape, or form participate in making a decision to prefer one creditor over the service? I mean, so that's the threshold.
That's a very open area, that one question.
It's open, but it can be, in other words, the point is, those directors can be challenged, and that's where the issue could come up. So my recommendation to this person when I received the call was, look, here's the rule. The rule is, when you read the first 2 words of section 6672, it says any person. So any person is literally any person. So the point there is, you have to be mindful, and I had a conversation with this, it's like a general partner or maybe a TMP, that type of person prior to the change with the BBA. But I had a conversation with him today, and I was basically reviewing with him, again, from a revenue officer's perspective or a revenue agent's perspective. And I also shared with him the Form 4180, which of course is the questionnaire. And I said, look, if in fact you have questions, speak to your counsel, review this questionnaire with your counsel, and because if you're speaking to your accountant, you don't have privilege. So, I mean, like everything else, you have to balance your risk and speak to the right person, because as you folks know, we do not have privilege, and that's section 7525 is nice, but quite frankly, it really doesn't give any protection. One of the reasons why it doesn't, and I know I'm going off topic a little bit, but these things come to mind and I'll share them with you. One of the reasons why 7525 does not really help is because any advice you or we give to a client in a compliance context, and that information eventually finds its way to a tax reporting position on a tax return, where's the privilege? Because that information is intended for a third party, namely the IRS, or the state of New Jersey, or New York State, so whomever it might be. So I share some of these thoughts with you and comments because these are the type of issues that pretty much get into on a regular basis, and as I said, most of the matters are generally matters that are coming in referrals from outside sources. So in most of these cases, I'm retained by counsel, so the privilege and the attorney work product attaches. But in context of just a normal situation, you have to be very, very careful. Yes, sir?
I'm sorry, in your comments previously about the board of director members being liable for the.
Potentially liable.
Potentially liable.
Potentially.
So your conclusion is that they are potentially liable, but they may be able to demonstrate that they're not?
That is correct.
Oh.
That is correct, because the revenue officer generally is not going to stop at the officer level, right? Because typically you think of who made the decisions: the president, the CEO, the CFO, the COO, whoever it might be. But if there is a board, an experienced revenue officer, or an appeals officer for that matter, if you take the case to appeals, they're going to say, well, who else is associated with this company? And if you have board members, what do they know, what they didn't know? As a matter of fact, when I spoke to this gentleman this morning, and he was talking about a for-profit entity, it's in the financial services industry, so either it's like a hedge fund, private equity, whatever, but it's in the financial services sector. I asked some simple questions. I said, by any chance, do these directors that you're concerned about, have they been provided quarterly internal financial statements, annual review, annual audit? Does the liability, this $500,000, which is spread over a couple of years, but it's in the aggregate of $500,000, is that liability on a balance sheet? So I said, there's the knowledge, and there also is, did you know or should you have known? So you have to be very careful, but the point I made earlier is actual knowledge. That's really what the statute calls for. So, in a situation such as that, he said, Walter, I really don't know whether or not they had access to information, but I can tell you this. I said, what's that? He said, the liability, from what I understand, doesn't even show up in our books, in this entity's books and records. I said, well, sounds like you have some work to do in terms of, and I said the first thing you should do is you should retain counsel, because you're telling me things, and obviously I don't have as much knowledge as perhaps your accountant does. So if there's a liability out there because the accountant sees a bunch of notices coming in and the service is saying, look, you owe this, you owe that, what's going on? Now right now you have a buy because the shutdown, but with the $500,000, I'm surprised, you haven't been contacted sooner. But apparently it was just uncovered from what he tells me, but who knows? Bottom line there is, you just drill down a little bit, right? Is there a financial statement that has this information? If it does, how could the board member not know if it's provided to the board member, and then there's an email to the board member, and here's the financial statement, even though it's internal? So, it can get complicated.
His ability also.
His what, Howard?
His ability to think.
Oh, yeah.
If he's a business person or a lay person, it has a lot to do with it.
That's true. Sophisticated versus unsophisticated. That happens especially with the sentencing guidelines in criminal context. Okay. I'm going to jump around a little bit with respect to the outline. I prepared the outline over the weekend. Paul was kind enough to give me a call last week and said, Walter, Leo, he's the special agent that was supposed to show up. Leo can't show up. So I said, okay, fine, I'll step in. So I'm happy to do it for Paul and for you folks and for the society. With respect to, I'm going to jump around a little bit. So I want to talk about a tax controversy matter that has so many implications that I thought I'd share it with you because it involves exam, it involves collection, it involves criminal investigation, and it involves the U.S. Attorney's Office. And the matter is this, and it's the first item in the outline. And you can see what the fact pattern is very simple. An attorney representing an estate misappropriated a little over $300,000 from the estate. How did the attorney do that? The attorney wrote checks out to himself or herself, and the number of checks over a period of time, and we're talking now an estate, so estates don't last for 10 years. Some do, but not that many, right? So we're talking maybe a 2 or 3 year period at most. 42 checks were written. It's a lot of checks. It was uncovered by the beneficiaries. The beneficiaries contacted the State Bar. The State Bar took note of it. made a referral to the U.S. Attorney's Office in that particular jurisdiction. And I know you folks are probably very familiar with, at least in New Jersey and other states as well, it goes back, I don't know, 15, 20 years, maybe 30 years by now, the Sheridan case, right? So if there is a matrimonial matter where the court becomes aware of a fraudulent matter and it's backed up, say, by an expert's report, generally speaking, as you folks know, a referral is made to, could be New Jersey, could be U.S. Attorney, IRS, depends on how the judge in that case evaluates the evidence. But certainly if there's an expert report and the expert opines as to particular fraudulent behavior or conduct, oftentimes a referral is made. And there actually is a special agent in New Jersey who screens all of these cases that come in from the courts and determines whether or not there's, in a particular case, whether one should be pursued versus another. Dollar amount, deterrence value, the typical things that special agent focuses on. So with respect to this case, the lawyer misappropriated the money, U.S. Attorney's Office gets involved, a criminal investigation is involved. The evidence is overwhelming. So the attorney in this particular case pled guilty. And the incarceration for the sentencing guidelines is 21 months. So that's the story with this person. Now, in terms of the issues, the court ordered restitution. As I said, the amount was a little over $300,000. The court ordered restitution. When I had a conversation with a person associated with this case, and I started to ask questions, I said, has the defendant in this case made restitution? Yes. What is the source of the restitution? Father paid the restitution. I said, is father aware that there may be a potential gift tax issue here? Right? Versus a loan. And I said, if there's nothing contemporaneous to document the intent at the time, because we know what the rule is for loans, in terms of the 9 factors that determine whether a transaction is a gift or a loan, right? I said, here you have a situation where if father made the payment, there's that potential collateral consequence. And the person who was speaking to me said, I'm not aware if the father is aware of this issue. I said, well, what's the father do? Father's a lawyer.
He took from his
I said, well, maybe the lawyer should take note of that, okay? The father should take note of that. So the one collateral consequence is, of course, what the source of the funds is. There may be some money that was part of the restitution that came from the defendant, but that's irrelevant. I mean, if the father made most of the payment, then you have that issue. Another issue, on the income tax side, whenever, and this is probably 99.9% of the time, whenever there is a guilty plea to a felony, taxpayer is generally collaterally stopped from arguing not to have the civil fraud penalty imposed. Because by definition, you pled guilty to fraud, tax fraud, the civil fraud penalty under 6663 covers that on the civil side. There have been some very, very rare, and when I say rare, circumstances, and one in particular that I worked on last year where Chief Counsel's Office and IRS special enforcement agents agreed to not impose the civil fraud for a very, very unique situation. One of the reasons was that even though this investigation lasted for 5 years or 4 years, the U.S. Attorney's Office, after 1 year of just contemplating white paper information that was provided to the prosecutor, and some of it was developed by our firm in terms of assisting counsel, was that the U.S. Attorney's Office declined prosecution. But yet, initially, IRS, civil, wanted to impose a civil fraud penalty. And we argued, I think forcefully, and from a zealousy perspective, why the civil fraud should not be imposed, because the agent, the regular case agent said, well, even though the prosecutor declined prosecution, that doesn't mean that there was not the intent to evade. And that may very well be true. but you also have to demonstrate the willfulness issue. And willfulness for criminal fraud is different from the willfulness for the civil fraud statute. It's beyond a reasonable doubt versus not. So in that situation, we were able to basically just have, believe it or not, inaccuracy related. The agent was not happy with it, but the decision was made by higher-ups. So getting back to this particular case, it's pretty clear that the civil fraud penalty will apply to this particular defendant. Pled guilty to a felony. What about the restitution? Prior to the change in the law that came into effect December 22nd of 17, if I have the right date, 162F was amended, the fine and penalty provision.
163J is the end.
Now, I'm talking about the penalty.
Yeah.
Prior to the change in the law under 162F, if you were paying restitution and the restitution was remedial in nature, not punitive, there was substantial authority to actually take that deduction as a business expense or whatever your category is. But now with the change in the law under 162F, it's totally different. So in this particular case, this person pled guilty after the enactment of the modification to 162F, fines and penalties. So it's very unlikely that whoever made this payment, whether it's coming as a gift or whether the target made the payment, regardless, there are limitations now, and it applies to so many areas, and that's why I bring up 162. It's not, whether it was remedial in nature versus punitive. That's out the door for post 12/22/17 transaction. I guess are effective for 1/1/18. So keep that in mind in terms of if you ever have situations where you have restitution. The other area, some of you may be familiar with this from last year, Supreme Court case called Kokesh, K-O-K-E-S-H, disgorgements with respect to, say, an SEC matter, no longer can be deductible for federal income tax purposes based on circumstances that are in the Kokesh case. So you have to read the Kokesh case in order to determine whether or not a disgorgement would actually be deductible, because right now the current thinking is that based on the language in the Supreme Court case, and again, I'm not a lawyer, reading this case, there are significant limitations on when a disgorgement, if at all, can ever be claimed as a deduction. So just some other highlights that crossed my mind. Now, with respect to this particular lawyer who misappropriated money from the estate, well, by the way, the beneficiaries decided not to pursue any litigation against the attorney. They just felt it was sufficient to make the recommendation or the referral to the bar. The bar contacted the prosecutor. They're happy. And father made restitution. So the money is now back in the estate checking account or wherever it's supposed to be. Yes, sir.
Yes, sir. On what would the civil fraud penalty that you talked about before, on what would that have been calculated?
The civil fraud penalty is calculated on the amount of tax that's attributed to the fraudulent conduct.
So in other words, he should have reported on his tax return the money that he took from the estate.
Yes, sir.
Okay.
And just as another follow-up to that, because when, it's interesting, when we have these conversations, something else pops into mind. I think it was over, like, say, a 2-year period, so you'd have embezzlement income, whatever that amount is in year 1, embezzlement income in year 2, right? I mean, you should have. However, let's assume restitution is made 4 years after the fact. That restitution does not in any way offset what you previously embezzled, because you had to include that in income in the years that you embezzled the money. So that's important to keep that in mind. The other thing is this, with respect to the restitution, is that, I mean, it depends on what your business was or whether you itemized or not in those older years, in those prior years. But the point there is, even if you make restitution, it does not offset what you had to previously include in income. And the point of the fraud penalty, it is 75%, as you folks probably know, right? 75% of the deficiency related to the fraudulent behavior. Now, the other question that came up in this particular case, and you can see how how all of these items in one particular case, how they involved exams, CI, prosecutor's office, they also involve collection. Because the next question I had was, okay, this person, hold on for a second, this person owes whatever the liability is with respect to the embezzled amount, the misappropriated amount. Well, what's the liability on that? Well, gee, Walter, we don't really know yet. Okay. But you did receive probably a revenue agent's report, not in the civil context, but a revenue agent who cooperated with special agent and the U.S. attorney. The revenue agent prepares an RAR, 4549, and that particular report shows what the actual deficiency is. It's a criminal deficiency, but it's still a deficiency. So I said, what's the amount that's owed? Do you have any idea? Well, I've heard it's about $200,000. I said, okay. That may make sense, right? 35%, save $300,000 plus interest and penalties. I mean, it's probably in that ballpark. So I said, okay, what's the status with collection? Well, collection hasn't contacted us yet. I said, is that because of the shutdown? Correct. I said, okay. So the next question is, well, what are our options? What's the financial condition of the defendant who now is in jail? The person wanted to enter into the facility sooner rather than later to begin the sentence. We believe the person is insolvent. I said, okay. I said, that has to be demonstrated. So let's just take you through the different hoops for collection, which you folks know. If you have the ability to pay, installment agreement, maybe full pay if dad has more money, fine. Installment agreement, OIC, offer and compromise, perhaps. I said, but that's a tough road. I said, you know, you really have to demonstrate not only insolvency in the equity sense, liability is greater than your assets, but also that you have to then demonstrate that you don't have any ability to pay currently. Well, I think this person's going to be making $50 a month. So that's out the door. So bottom line is, I said, once collection contacts whomever is the power of attorney, the representative, I said there is another opportunity. Based on the facts, you might be able to persuade a revenue officer to identify in this particular taxpayer's master file currently not collectible. Code 53 internally. I said what that does is enables no enforcement action. IRS revisits the situation at least once a year to determine whether the financial condition of the person has changed. If the person is still incarcerated, there's not going to be any change. I said, however, once that person gets out, you know, all bets are off, right? Are there any assets and any property, things like that? So I didn't go into all of that in terms of the actual number, actual crunching, but you can see what an RO would do. In this particular case, let's not forget that this taxpayer, as I said, practices law. Well, the ticket to practice law has now been lifted. So this person will never be able to practice law again. So in terms of what he or she will be able to do in the future, God only knows, but this liability is will still be out there. You had a question, sir?
Oh, yeah, I'm sorry. If the income that was fraudulently taken was taken in a trade or business, would he
Taken into or from?
Taken in a trade or business. In other words, he was an attorney, so presumptively it was in his activity as an attorney. If he was self-employed, would he get credit for Social Security for that?
It's not earned income.
I don't think a crime of moral turpitude, a felony, would at all enable one to have credit, because don't forget, it's not his money or her money.
Well, suppose he pays Social Security tax on it. Suppose he pays self-employment tax on it.
That didn't happen.
It didn't happen.
It didn't happen. And the reason why it didn't happen is the monies, the 42 checks,
Right, yes.
were deposited into a personal checking account.
Oh, okay.
And quite frankly, I would think that there would be no benefit to anyone who embezzled money, put it into his or her operating account, and wanted to get a credit for Social Security. I think that would be,
Well, this year they can get the QBI.
as long as it's below 315, right? So you can see in a situation like this how things can really get complicated.
What about the 8,300 you forgot to file?
Well, you know, I can't speak for that
It has
person.
penalties in itself.
This is true, and maybe that may manifest itself down the road. Who knows? So anyway, you can see in this particular example how things can really get complicated. And, you know, if you don't have the right guidance, the right, you know, legal counsel for a client, you really just have to make sure that the client's in the best hands possible, whoever's hands they happen to be. Back in June, I'm going to speak a little bit about cryptocurrency now. Not necessarily the whole issue of blockchain and all that stuff, you know, it's a ledger and all that business. I want to talk about issues from the IRS perspective. And some of them you may already know, but I figured I'd give you an update on the crypto. In June, I was on a panel associated with New York University, who has an annual tax controversy conference. Some of you folks may be aware of it. And I was on a panel with an attorney who was the moderator, and the other person is a special agent for the IRS. And our panel focused solely on virtual currency. And this particular special agent, who I admire very much, he's very competent. And he was the revenue agent who brought down Silk Road. He was the special agent. He was a special agent that broke the case several years ago with the Silk Road drug conspiracy that was going on for a number of years. And how he did that was just being tenacious, attention to detail, persevering, and he used Google Advanced to find out as much as he did. So we had that panel, and I've had some conversations with him since, and I guess it was back in October. We had a National Tax Partners meeting, and we invited him to our meeting, and he and I, at the end of the meeting, the last segment of our National Tax Partners meeting, we had a conversation about what he does, the focus of the service with respect to virtual currency, and just many issues that are really of concern, not only for our tax partners, but also on the audit side, financial statement side, because there are entities, financial services entities, I would think in particular, that have investments in virtual currency, whether it be Bitcoin, Ethereum, whatever it might be. So, you know, we had this conversation, he and I, the special agent and myself, and he reiterated or stated something that he said at the time we had the conference in June it was at the Crown Plaza in New York City. It's a great conference to attend, by the way. It's like 2 days. It's both civil and criminal. So if you have the opportunity to attend, and especially if you want some tax CPE, it's a very good program, it really is. I'm not associated with it in any way other than at times we sponsor, and also I'm on a panel maybe every other year. But it's a great program. Paul?
Could you just give some of the facts of the Silk Road case? I don't know if everybody's familiar with it.
I will. Yeah, I will. Yeah. Paul's familiar with it now. The situation was that there was an ongoing investigation by the DEA to try to uncover how drugs were being sent into our country, in effect, right? Smuggled in, however, whatever the word is.
They came in over the fence.
Over the fence, or maybe underground also.
Under
There are
the fence.
tunnels now, don't forget, Howard.
Under the fence. Okay.
So there was, the DEA tried and tried, and this person just had very, very good camouflage, the perpetrator. He had very good camouflage. Couldn't find the guy. He had pseudonyms, the whole bit. So special agent, and you can read about him actually. If you were to Google the name of the special agent, his name is Gary, and his last name is Alford, A-L-F-O-R-D. Gary said, wait a minute, there's got to be a simpler way to figure this out. Because what was going on essentially was, and when you read the various articles, there was an article in the New York Times, I think it was back in 2015, that basically featured this particular case and what Gary was able to do. So Gary's saying, well, wait a minute, the DEA agents and maybe the FBI agents are having a difficult time, whatever the reasons are. Not that they're incompetent, but this person was really good. So, meaning the perpetrator. So he starts just Googling and figuring out things, and he just starts finding more information, And at times, and this is difficult for an agent. I mean, when I was an agent, there were 3 years during my career as a revenue agent when I was assigned to the U.S. Attorney's Office, working criminal tax cases with the prosecutors. So there are times when you would make, as an agent, you would, sort of make recommendations, or you would develop certain theories, and sometimes the theories or the recommendations would fly. Other times, depending on who the prosecutor was, it's like, gee, we really don't want to go down that road because we don't think it's going to be fertile enough, whatever it might be. Okay, so as an agent, you use your best efforts. Well, when you read some of these articles, Gary had some of those issues where a prosecutor would say, gee, I don't know if that's really going to be helpful. But he had this belief that it would be helpful. So bottom line is, he was able to figure out where this person actually was physically located, and then communicating with the prosecutor and the appropriate agency, DEA, FBI, probably DEA mostly, but FBI probably was involved too. They were able to apprehend this person. But it was because of his tenacity and his perseverance and attention to detail. So I say that because in this world of cryptocurrency, if Gary were speaking here today, he would say one thing. We have all the information we need. And part of that is because, and I'll touch on this in a moment, part of it is because of what Coinbase was obligated to provide to IRS Civil in response to a summons. You may remember about a year ago or so, maybe even a little bit longer now, maybe a year and a half, IRS Civil issued a summons to Coinbase, which is on the West Coast, if I recall, Oregon or Washington, and we want your client database. Well, Coinbase fought it, they lost. Coinbase had to turn over names, addresses, social security numbers, accounts, account data, meaning account numbers, where the accounts are located, the amounts, everything. It was basically like a UBS kind of thing from many years ago, right? All of that's turned over. There are approximately, based on the information that I was told and read about 14,000 names. Now, IRS CI, and this has been going on now for about a year now, especially with the new chief of CI, Dan Fort, the service is bringing in a number of very, very competent tax, technology, data analytic individuals. They may not have a clue about tax evasion, badges of fraud, double entry set of books, but they know large data, they know how to extract this information. So the service is basically using data analytics now, and not only in, by the way, not only in CI, but also in other areas as well, but certainly CI for sure. And they're going through this information and then figuring out what are going to be those cases that would provide the greatest deterrence in terms of cases they decide to bring. So getting back to Gary, he said this in June. He said it on a number of occasions. He was also speaking every year, Blank Rome in New York City and Philadelphia. Blank Rome has annual tax conference. Gary was on a couple of those panels. Bottom line is, he said, we have all this information now. The one thing we don't have yet, but we will get it, is willfulness. Because if we have all of these facts, now we just have to determine whether there is willfulness. How is willfulness defined for criminal purposes? Voluntary violation of a known legal duty. So if a person knows that there's a legal duty to report a gain on the disposition of virtual currency, and it becomes fiat, whether it's a euro, whether it's USD, doesn't matter. If it's fiat or some other type of exchange, and I'll just touch on the fact that with the new law, like-kind exchanges don't apply to Bitcoin. You folks may know that, but it's just worthwhile to mention. So the only thing missing is willfulness. And they're going to be able to find willfulness. They'll find willfulness in a number of ways. People screw up in plain English. There's discovery, there are emails, there's a whole bunch of issues, just like with any of the other financial services companies. Yes, sir.
Yeah, so in this case, the government basically is looking at the activities of the account holders that were, or the account holders whose names were handed over?
Yes, sir.
Oh, okay. So if those people reported their income properly, they wouldn't be, or they would have criminal charges brought against them then?
There would be there's no criminal liability
Right, yes, okay.
because they reported it. So that's what's missing, willfulness. It doesn't take, like everything else, if you go, and I'll tell you another thing, which I suggest to you, not that I want to tell you, but I'll suggest. Information in the Internal Revenue Manual is a gold mine. To this day, I use the IRM very often. Why? Because even though it does not have or is precedent, so to speak, in terms of case law or a statute or anything along those lines, and you go down the ladder, revenue rulings and so on, basically it's a policy statement, right? And the IRM instructs agents, whether you're a revenue agent, whether you're RO, I mean, if you go through the manual, there are a whole host of chapters, right? I mean, many. Exam is chapter 4, collections chapter 5, you have CI, you have a whole bunch. Many. So the point there is use the IRM often because, what's this?
This is the IRM dealing with information returns.
Oh, okay. I don't need that right now, but thank you.
It's 16 pages.
And that's just
of
16 pages.
penalties.
How many pages are part of, I think I heard one of our partners say, with 199A, is like there are 400 pages in the regs?
489.
How many?
489.
There you go. I mean, can you imagine that? I mean, like,
This is just penalties.
well, there you go.
Information
There you go.
returns.
So, voluntary violation of a known legal duty is essentially the standard for willfulness in a criminal context, and the case that goes back many years is Pomponio. So, cryptocurrency, the last and the only guidance at this time is Notice 2014-21. The issue with the notice is basically this. The service has determined by way of this notice that virtual currency is property. As a result, it's not currency, it's property. Because it's property, the service has taken the position in the notice that the general tax principles of the Internal Revenue Code apply to cryptocurrency. The problem that has arisen over the last couple of years, since this is, no, it's been 4 years now, maybe a little bit more, is that the issue now is, well, there are provisions inside the Internal Revenue Code that are general tax provisions that may or may not apply. For example, would the wash sale rules apply? I mean, the service says in the notice, it's property. Well, does that mean wash sales apply? Prior to TCJA, like-kind exchange apply? And, there are other issues that the notice never really addressed. But the one thing that the notice does address is that if you engage in a transaction with respect to cryptocurrency, whether it's Bitcoin or Ethereum, whatever it might be, and there is a transaction that results in a gain or a loss, it better be reported. And that's really the bottom line. And if there's substantial authority to take a position one way or another, or even if there's not substantial authority, remember 6694, what does it say? At the very, very least, it says, if you have a reasonable basis and you disclose, so use the Form 8275, right? So depending on your level and the client's level of authority, at the very least, depending on what the situation is, you can take a position. But that position, again, just like with the due diligence with the head of household, you have to document. Yes?
Two questions. Do you know, does the IRS consider cryptocurrency to be an intangible?
It is property.
It's property, but tangible or intangible?
I don't think it made that distinction.
Oh, okay. Do you know if any of the states have adopted a position on cryptocurrency?
I'm not aware of any specific states, so that I can't answer. I don't know the answer to that.
If anything, it'll come out of California, the 9th District.
So, with respect to the notice 2014, many practitioners have said and written to the service, we need more guidance. Whether guidance comes out, I think the answer is yes. And the reason why I think guidance will be coming out, although the service has basically said publicly, it's not a priority because we're dealing with TCJA and all of the issues that are about the change in the statutes. So it's unlikely that you're going to have clear guidance. But there is something that has occurred. You may have read this probably about 6 weeks ago, maybe 2 months ago by now, that IRS collection has seized Bitcoin in connection with a substantial liability due and owing. So they were able to go through the procedure, request, send out the notices, you owe X amount of dollars, file the notice of lien, right? Notice of intent to levy. Maybe there was a CDP issued, maybe there wasn't, I don't know. But eventually, IRS was able to literally seize the Bitcoin from the account or accounts of a taxpayer who owes whatever the dollar amount is, significant. So, if collection is already seizing, that really demonstrates, in my mind, that it clearly is property that the service wants to use to collect in order to take care of a liability. So we'll see what happens. But if you're not familiar with 2014-21, and it's a notice, it's not a rev proc or a ruling, and you have clients that may have questions about, we have to advise them that if there's a transaction, they need to report it. I don't know if any of you folks read the story of this young college student from last year. He invested $5,000, and all of a sudden, this was pre-18, so it was toward the end of 17. His investment of $5,000 increased to $800,000 because Bitcoin at that time was worth about 20 grand versus what it is now. Like maybe now it's like 4,000 or 5,000, something like that. So he transacted with the Bitcoin. So he has an $795,000 gain. He had no clue that he owes $400,000 in taxes. So he was had no clue. Now, some people may say, we're ignorant of the law and things like that, but bottom line is, 5 years is a long time to have publicity about virtual currency from the service's perspective. You read about it, there are articles every so often, and maybe twice, sometimes 3 times a month in business publications, including the Wall Street Journal and others. So, if not, advisors are aware. And that goes back to our potential liability as preparers. And also, don't forget, and I say this in a way that just to keep it top of mind, the Office of Professional Responsibility inside IRS, receives referrals from revenue agents, because in many offices, even in New Jersey, as you folks may know, there is, or at least there is one person that may share a couple of offices, but there is a penalty preparer coordinator. Penalty preparer coordinator will get cases or have conversations with the revenue agent who's auditing, say, a tax return, and there's a discussion about whether or not the preparer penalty should be imposed. OPR, Office of Professional Responsibility, receives referrals from the field as well. So I say that because I had the good fortune to be a member of the IRS Advisory Council for 3 years. My term ended the end of 17. And for 3 years, I was part of the subgroup for OPR, Professional Responsibility. So, our group, which was just a small group, about 5 practitioners, generally tax attorneys, CPAs, enrolled agent, and we worked on professional responsibility issues dealing with Circular 230. So, I can tell you from experience, and you read this when you just read about in the IRB, the Internal Revenue Bulletin, that those practitioners throughout the country that are disciplined for various reasons, and it goes state by state, as you probably know or are aware of. OPR takes a very active interest in cases that are referred, and it's not just from exam. It could be collection, and could even be appeals, but generally it's going to be either an RO or an RA.
New Jersey has been out of the DOJ for, I think there was one attorney on the last one that I read.
Oh, you mean in terms of, for New Jersey?
Yeah.
New Jersey's been pretty good. Other states, like California.
California's high risk.
Yeah, I was going to say California's high risk. So anyway, that's what I want to just touch on with respect to cryptocurrency. So it's important that the clients essentially comply, because there will be some information reporting that will be shared, I'm sure. Coinbase, I mean, even if there's no transaction for a client in a particular year that IRS Civil has the information in response to the summons, the taxpayer, I mean, that person has been notified, has been flagged that the person has, so who knows? You know, what can happen down the road.
The IRS last week lost a case on fraud because they couldn't prove willfulness.
That doesn't happen very often, but it does happen, yeah.
They lost a big one. They couldn't prove willfulness.
Well, the facts weren't there to support it. That's the same thing with the
They've
case.
got to prove it.
Yeah, that's the same thing I mentioned earlier with the case that we were involved in, where the prosecution declined, the U.S. Attorney's Office declined prosecution. Many of you now know that the offshore program ended on 9/28,
September 28th.
right? 9/28 of this year. So now there's a new program. And the new program was, I guess maybe 6 weeks ago or so, maybe 2 months ago, it was released. Just a few things about it that I just thought I'd share with you. The look-back period is 6 years. And let me start off by saying it applies to both domestic programs and offshore programs. So it's a one-all. This program is not necessarily the same program as the one that's been in place since, 1952, just the basic domestic VB program. But this program, I believe now, will take its place. So what the program basically calls for is, it's in the civil resolution context, civil resolution framework. So there's a 6-year look-back period. It involves the most recent 6 years. It applies to domestic and offshore tax compliance matters. The civil fraud penalty may apply, 6663, but there also is, and this is one that's a sleeper, there also is another provision that is in the outline, 6651 small f, the fraudulent failure to file a return. Remember that there is a statute, section 7203, that applies to failure to file, where a taxpayer can be prosecuted for failure to file a return. That's a misdemeanor, as compared to evasion, 7201, which of course is a felony. But there also is a civil penalty for the fraudulent failure to file, and it's 6651 small f. And on occasion, not very often I have to tell you, but on occasion, that penalty will be applied in a situation where a taxpayer failed to file, but just like the difference between criminal willfulness and civil willfulness for purposes of the civil fraud penalty, if the service believed that the beyond a reasonable doubt standard was not met or cannot be met, there is 6651F that basically applies a fraud penalty to the failure to file. It's, again, sometimes in these failure to file cases, they can be elevated from a misdemeanor to a felony. And the reason why they can be elevated from a misdemeanor to a felony is because there's another act over and above the failure to file where the service has uncovered that, and basically it demonstrates further affirmative act of evasion. So you can elevate a failure to file, a client, can elevate a failure to file case to a felony if there are other indices of misconduct, such as not cooperating, for example, impeding a revenue agent or an appeals officer's work. So you can actually have an elevation, and that is generally called the SPIES evasion, S-P-I-E-S, where you start with the failure to file, but there's other conduct that elevates the matter to a felony. Now, with respect to the VD program, a revenue agent will probably want to impose, say, a civil fraud penalty if the agent believes that it wasn't just money, for example, that was inherited and the person didn't know about it, or things like that. That you heard a lot of those stories, or many of those stories in the offshore program. A person had money in his or her bank account. The person inherited it from God knows when and didn't, just had no clue about the tax compliance issues. But I would think in these cases, at least out of the box, an agent would probably want to impose the civil fraud penalty. However, this provision in the new program does allow for accuracy related if your facts are such that you could demonstrate that there was no willfulness in the civil context. So it's important to keep that in mind. So you can argue for accuracy related, and also the program does cover FBARs as well. The FBAR regime, though, is what's in place now. So, as a matter of fact, this case that I mentioned earlier with the attorney, that situation, there was no offshore financial transaction. But in a case that I began working on yesterday, a CPA contacted his insurance carrier. And the insurance carrier contacted me and asked me to provide guidance to the accountant with respect to certain issues that the accountant has. One of the issues deals with, he just found out that his clients, husband and wife, that unbeknownst to the accountant, the wife has an offshore account. And how he found out about it was that the husband said to the accountant, for 17, file an FBAR for my wife because she has a foreign account. So the accountant said, what about prior years? Same, 15 and 16 as well. So there's an issue with subchapter S and the statute of limitation, but just in conversation with the client, the accountant learns about the FBAR. So the FBAR can also be part of this new program. So it's important to keep that in mind too. Yes, sir.
They used to have a streamlined offshore voluntary disclosure program. Is that still in effect? And what's the advantage of using the new program versus the streamlined program if you weren't willful?
Well, it's going to, honestly, the issue with the streamline is you have to make a certification, as you probably know, as to non-willfulness.
Right, yes.
I think every case, literally, and I say this because it's true. It's not a way to not answer your question.
Right, yes.
But I think many of these cases, they really, really turn on the specific facts and what could be the potential risk. So I would say that in any of these cases, I think it's advisable that even if you're working with the client, that the client retain competent counsel, because there are issues. For example, if you just take this case with the attorney and we have these other collateral issues that I certainly am aware of, but then maybe a practitioner who's not, say, of your sophistication in this group, that person may not have an understanding or an awareness. So I really think you have to play it one by one. Andy?
I was going to make a comment, I've made it before, that anyone here who has clients that come from an area outside of this country, and you know that they visit that country, their homeland or whatever, on an annual basis or even more frequently, that you always ask them whether or not they have an account, foreign accounts. Because there are many situations that this exists and you just don't ask these questions, and it's a very serious matter for them and for you, the fact that you've represented these clients for many years.
That's right. That's so true. You know, a couple of months ago, I was retained in a matter where, and we were not involved initially, taxpayer retained a very, very competent law firm to represent, in this case, her, to make an offshore voluntary disclosure. The disclosure was made in April of 2016. Representations were made by the client to counsel. I don't know to what extent, but it does beg the question, I don't know to what extent there was adequate or sufficient due diligence on the part of counsel to actually dive into the facts of the case, and I'm assuming that they did, but that the client just lied. That's what I believe happened. But anyway, the client submits the offshore program with all the different forms, the 14557, you know, the whole thing. Counsel was involved. 3 months ago, IRS Chief Counsel's office, maybe 4 months ago, IRS Chief Counsel's office contacts that law firm and said, we have information that your client made material omissions with respect to her offshore voluntary disclosure application. This was even after the person was pre-cleared. So the person was pre-cleared, approved, submitted all the documents. IRS found out that there were material omissions. Counsel, what are you talking about? I mean, literally had no idea, in all fairness. Turns out that the client actually lied to this law firm and the lawyers that were involved. And this is a very reputable international firm. So because of a potential conflict where this law firm arguably could become a fact witness if this thing were to evolve, and who knows where it could possibly go, this particular person had to retain new counsel. That law firm contacted us and retained us to basically do a forensic analysis, reconstruction of multiple offshore accounts. When I say multiple, I'm not saying 5 or 6. Based on the last information that we worked on, there are 25. It turns out that the amount that arguably was omitted was in excess of $9 million.
Immaterial pass.
Immaterial pass.
That's above the 10,000,
Or you can just
right?
direct deposit it.
9 million.
I know.
Yeah.
It's
9 million, yeah, it's above
10,000.
10,000. So,
It's underneath the threshold.
so now, here's a situation where, and here's the problem. And I'm very, very, I mean, I have a relationship with some of these attorneys in this law firm, and I say to them, I'm going to tell you, you folks, I mean, I know that oftentimes we as tax practitioners, especially when we're representing a client or you're preparing a tax return, I've always said, you know, we get truth on the installment basis if we're lucky, right? I said, what you have to be careful of, the IRS, and they know this, but I just had to say it. I said, if Chief Counsel's office knows that there's a significant amount of income, whether it's 2 million, 5 million, 10, 20, whatever the number is, ultimately, if your client is not coming totally clean with you, you realize the perjury trap that unintentionally would be set? I mean, the lawyers really, really have their work to do in a sense that they're now going to be relying on not only the client, who now presumably is coming clean, but then also us to really flesh out what's the highest account balance, for example, what's the unreported income, for example, and so on. But there's a situation where the client initially didn't tell the truth to the original law firm. And IRS is aware of it. And now, Chief Counsel says, well, look, we want completely new, I guess amended would be an appropriate word. We want amended forms that demonstrate what's accurate, what's truthful, and correct. And you know, these forms are signed under penalty of perjury, right? So, we'll see what happens, but there's a situation. Yes, sir.
And you don't even know whether that 9 million is what they have.
No idea. At this time, I
So
mean,
when
we
they
don't.
prepare the amended forms, you don't know if those are the same things.
Well, that's why, literally, literally,
You have
the
forensic.
the forensic analysis, and basically, the way we planned out to do this work is we treat the bank accounts as separate entities and basically just have do from analysis. Basically, for every debit, there's a credit. So if there's a receivable on one side, there better be a liability on the other, who's owed what. So we look at it in that way to keep it manageable, because you really need to think about the do from. Because ultimately, the one thing you don't want to do, and you shouldn't do, is double up on an item that was transferred from bank account A to B, when in fact it was already in A, and you're already accounting for that. So you can appreciate the time that this would take, but your point is very well taken. It's exactly correct.
Were they recording the income, the interest income from
What
these
was that, Nicole?
accounts? Were they recording the interest income from these?
Interest income was reported, but not with respect to all of the accounts.
So, partial.
Yeah, but believe it or not, the interest income is not significant compared to the highest account balance, because these accounts generally don't pay a lot of there's not a high rate associated with the deposit. It's still there though. I mean, we're not talking a few bucks. I mean, we're talking
Right.
hundreds of thousands of dollars, but it's not like 7 or 8% per year and so on.
So if they were if the majority of it said was reported though, they could have done a quiet disclosure.
If the of the income,
Yeah.
they could have considered that, but they opted for the offshore because there was a concern from the original counsel's perspective that there could be the potential for a prosecution, notwithstanding the quiet disclosure. And the reason why I say that is one of the points Howard made earlier. IRS filters now are extraordinarily robust and very effective. So when it comes to filtering amended returns, there's a special algorithm or program, whatever it is, I'm not privy to it obviously, but there's a special algorithm or program that filters out quiet disclosures and elevates them to at least the screener, and then from there, if necessary, to either the field or correspondence or
Well, that's why the cases for under 50,000 are still out in Holtzville, but the other ones are in New York State.
you have to be careful with the quiets. You're really.
No, we had a client and she just popped $2 million in Canada because her friend told her it was safer over there. And she reported the interest income, but
Right.
when they changed accountants to our firm, we're like, Scotiabank, that's Canadian. And we're like, no FBAR, no 8938, no nothing. But the income was reported. We were successful with the quiet disclosure.
That's a strong fact. The fact that the income was reported. You didn't check off the box, right? The
No, on
Schedule B
Schedule B, no.
was not checked off. And the highest account balance, whatever it was, what penalty was imposed
There was no penalty.
on the highest account balance?
No penalty, no nothing.
You had very good reasonable cause. Very good facts. Okay, it's almost a quarter of, so I'm moving along based on Paul's schedule and your schedule. I want to touch on the future state a little bit. And the reason why I want to touch on the future state is it's pretty clear, and I think this is important, that especially for practitioners today, depending on where you are in terms of how long you've been practicing, and for students who are in college, for example, or meaning undergraduate, or even younger than undergraduate, high school. I mean, some people, they're thinking about what I want to do. So let me just share this with you. I believe very strongly that the future of the tax function and the future of the tax professional, it's already here now. I mean, the future is here now. I think we know that. But just to emphasize it, because when you have conversations perhaps with relatives, students who are in college, whatever it might be, or thinking about accounting, or some other particular area that does come into our space, tax technology and tax transformation are key concepts that, I mean, even in our firm, and I'm sure in many of your firms, tax technology is like, it's on the mind all the time. I heard conversations about whether with the e-filing, whether you download your update and things like that. the whole point here is that even if your core curriculum is, let's assume it's finance, or let's assume it's math, or it's accounting, or something along those lines, if there is not an integration into that curriculum of technology, and I don't mean just, basic technology, I mean really, really have an emphasis. I think for younger people especially, the world is their oyster. So if they're thinking about accounting, I mean, if you think about what the Big Four are doing today, and you think about what medium-sized firms, such as our firm, say Eisner, Witham, Markham, all of the firms that, we're all in the same boat basically. We have to be in the forefront of technology, and the people that I think our HR folks are bringing in, or want to bring in, are individuals who are certainly very, very technologically savvy, and they understand, for example, that if you just take, for example, there's one program called OneSource. Some of you may be familiar with it. It's a program that basically takes you from beginning to end, right? Some firms don't have that. So if you're going to attract competent people to work in your firm, I believe you really have to have the tax function being state-of-art from a technology point of view, and if you're in a larger firm, for example, where you have significantly large business clients, and many of us do, it's not necessarily just on the manufacturing side or the commercial side, even financial services, you can have some significant clients. And especially on a financial services side, where you have transactions that, that deal with options and forward contracts and, millions and millions of transactions on a daily basis in some companies, right? The issue of compiling data is so important in a real-time way that what we've done in the past in terms of tax return prep or basic accounting and even bookkeeping, totally out the door. It's totally gone.
It's gone.
It's gone. So these issues that I want to speak about.
Don't you have sales tax on all your 1040s? Don't you put sales tax on all your 1040s?
That question.
The issues that I
Did
just
you see the question last week?
On Sunday.
Person is an internal auditor and now he wants to open up a tax practice, so he wants to know, but he can't find anywhere where it says there's sales tax on a 1040.
For New Jersey.
They're not learning the basic core,
I hear you. I understand that.
okay? You can stand on the table and say 941 and they'll tell you it comes after 940.
Just like 8867 comes after 66.
Right. They have no clue.
I understand.
And
That's,
it permeates to their home,
well, that may be.
who may be your client.
That may
But the
be.
difference in academia today is that big.
Well, that was one of the reasons why this law firm in Connecticut wanted to sponsor the future state of the accounting profession, and it will be done again in the spring for the same reason that you're saying. Because basically, one of the lawyers there, he basically is saying, I got to tell, and he has many clients and many accountants who are his referral sources and things like that. And he says, if you folks are just going to be preparing tax returns, you're already a dinosaur. I mean, that's exactly what he says to his accounting
It's not going to
clients.
be prepared anymore.
Well, I understand that. That's
5
what-
years from now, none of this is going to be relevant.
Well, that's
It's going to be there in hallucinatory form, okay? And you press a button.
it's in the cloud, Howard. In the cloud.
What the cloud's another farce. But you pull the plug, the cloud is gone.
Well, that's true.
But
That's
the
true.
thing is, 5 years from now, and I've attended the courses, 5 years from now, we're not going to do tax returns. We're not even going to do audits.
I think you're right on both of those points, and that's why I want to bring up. That's why I'm bringing up this
The
whole issue.
accounting profession is going to be altogether different.
Well, that goes back to the point earlier that whether it's a tax return prep or an audited financial statement, you can buy that anywhere. You can shop around for that.
Yeah.
So now the issue is, well, how does technology impact our practice? Is really what I just like to focus on for a few minutes. One of the things that I think is important is, especially if you're speaking to younger people that are in your firm or outside your firm, is that if a person can select, and it may take time for this person to evolve, But if a person can select a non-traditional niche area, that the person becomes a trusted advisor to that client base.
40% of Price Waterhouse's hirings were not CPAs.
Right. So the point there is exactly that. Non-traditional niche areas, that in combination with tax technology background and also tax transformation. There's a difference between technology and transformation. I just want to share that with you because I think it's important. In many of the large firms, I'm talking about Big Four primarily, and maybe the tier right below, many of the individuals who they're hiring are individuals that are able to assimilate data, big data. They refer to it as large data. So for example, let's assume you had this company, and I'll give you an example. Take GM, take any big multinational company, and they have entities all over the globe, right? Could you imagine if you didn't have that support, that infrastructure within the company, because it really belongs in the company first, and then the CPA firm would have those consolidating tools, the technology, to take the data from all type of disparate parts within a large company, like a GM or like any other company, Amazon or IBM, whatever it might be. Take that data and then have the subject matter expertise not only in-house in that company, but then also in the CPA firm. Because if you have one source, if you have another program that's called, I believe it's called CSC Connect, those programs take data from disparate functions within the client database, and then it's consolidated into another program for purposes of accounting and then tax. I mean, that's the type of expertise we need. I mean, I certainly don't have that expertise. I mean, I don't have that type of background, I don't have that expertise. But certainly younger people that are in school today and those that have been out for a while, they have that expertise. But that's what the larger firms, as you're pointing out, are looking for, because they need to streamline. The streamlining comes about through robotics. Robotics is basically automation. So if you're able to have in your firm, depending on the size of your firm, automated programs, whether it's artificial intelligence or some other type program, where you're able to collect, I mean, there could be CPA firms that are represented here, where you may have maybe 5 or 6 clients that are really, really big clients. And yet the question is, how can I streamline that process, make it more efficient, and at the same time be more profitable for me in terms of the firm? So it's all of these issues, and the transformation is really important, because the transformation is the link between the client database and the accounting firm, whereas the tax technology person inside the accounting firm is the one who's able to manage from one year to the next, from one cycle to the next, the rollover and things along those, and at the same time to introduce the new software tools that are necessary. So for example, if you go to Thomson Reuters, and I read this a while ago, but it certainly was interesting to me because I'm not a technology person. And I read about how OneSource as a software program, what it really does to streamline, what it really does to consolidate, bring the information basically from the GL to the basically a tax return for all intents and purposes. It's phenomenal, and this has been developed for a while. And there are other programs like that, other vendors like that. So
I'm the IRS liaison for New Jersey, with 3 or 4 others. We were in Philadelphia, and we were told what's going on down there. And
what do you mean by down there?
In Philadelphia and other locations.
You mean the business community?
Within the IRS.
Oh, within the IRS, okay.
They've got people that are working on 10 years from now, not now.
I know.
Okay? It's a big technology group. Okay? Their workings are artificial intelligence. What do they call those? It's algebraic, whatever it is, formulas.
Algorithms.
Yeah. Okay, logarithms.
Yeah.
They manipulate logarithms to get the base of what they're looking for, which they can put into a program.
Right.
And they've done it, and they're going to be testing it out with the Schedule C and the W-2 program. As a matter of fact, the person I spoke to at the IRS wasn't even aware that that was going on.
let me say this to you. I think, with all the technology, and I'm certainly, as I said, I'm not an expert at all, but I think my takeaway is that regardless of the size of your accounting firm, if you're able to go from book to tax in the most streamlined, efficient way possible, based on your budget, based on the size of your firm, there are whole other variables, obviously, that come into play. But I think the bottom line is my takeaway from getting involved in this particular issue and just reading about it and trying to understand it more fully, from the large firms to small firms. I mean, I was a partner in a small firm for a number of years, so I appreciate what it is to be, in a relatively small firm. If you can manage on your business side to be able to streamline the process from book to tax, and you take into account ASC 740, financial reporting, income taxes, if you can take that into account and streamline that whole process, I think the profitability for that same client, will increase, but yet at the same time, you're benefiting your client and it's more streamlined. So I think that's important. The type of majors that are recommended now that are integrating with computer technology are math, finance, accounting, even economics. Because as you said, larger firms are hiring consultants. And consultants are, you name it, all type, right? So it really doesn't matter. Also qualifications, personal qualifications are important for the person that you're going to
When are they
hire.
going to change the CPA exam within the next 5 years?
Yes, sir.
Many of the people, or a lot of the people in this room, are single practitioners and of a certain age.
Right.
So we're probably closer to retiring than we are to worrying about making a buck every day.
I understand.
If you don't have the money for technology,
I understand. That's why I said it depends on your budget.
so therefore what I do now won't exist. If there's someone going into my shoes in 5 years won't be able to make any money because they're competing with.
No, but there is something that I'll share with you, because when I was a partner in my own firm at the time, and I was a partner for 15 years in our firm, and it was not a big firm. We had we had 3 partners, including myself, and maybe 10 employees. The thing that strikes me about technology with respect to, say, many of the people that may be, in the same situation you're referring to, sir, is if you can develop in those last several years that you have your practice a streamlined way that makes your client base attractive in terms of an exit strategy, because many of you may be thinking of exit strategy. Well, how do you have an exit strategy that's appealing to someone who is maybe 5 or 10 years ahead of you in terms of technology? And I just think, I'm not in that position today, being a partner in Eisner Amper, but I think about that, and even with my former partners, and I speak to them on a regular basis, and one of them is saying, I'm thinking about an exit strategy, and what he does more often than not is he's looking to bring in another firm, basically because some of his clients are getting older. They either sell, as you probably have experienced, they may pass away, whatever the situation is. So he's thinking of an exit strategy, but he's also at the same time, he brings in laterals whenever he can, and it's a tough business to bring in laterals. I mean, I can tell you that. I experienced it for a number of years, and probably you folks have done too. But the point is, if your exit strategy is, I'd like to sell my customer list, my client base, how can you make it attractive to someone who may be 20 years younger than you are, or 25 years younger than you are, and that person is way ahead of the curve in terms of technology? That's what I can share with you, because I was in that situation, and I understand that even today, you have an asset. You just don't want to walk away from it. So I think my time is up, and I appreciate being asked to speak to you folks, and happy to do it. Thank you.
And thank you, Walter, for stepping in on such short notice. I appreciate it.
Ball for you anytime.
I don't know if anybody
On
has
furlough.
anything before we go, if anybody has anything else they want to discuss, but
Yeah, the one thing that came out I saw today is that the statutory employees will be eligible if they, for QBI, if they fit the criteria, if they're under 315.
Or less.
Well, don't forget the statutory employee flips over to Schedule C, so it's gonna.
Exactly, but the IRS came out with that
Right.
today. I don't know, maybe their AI did it because I don't know, even working.
There seems to be a lot of articles on the opportunity zone. That seems to be an issue that,
It's still undiscovered.
Yeah, we had somebody come and present
did you?
on that. Yeah.
The law firms started building this stuff this December 23rd. Okay, but none of them have gotten Holy Grail Sanctuary yet. They're trying to sell them, and they're going to sell them. It's going to be like the old tax shelters. But you remember, the opportunity zone, the benefit is if you hold it for 10 years. If you let go of it sooner, you're gonna have to pay tax.
You own land in Patterson for 10 years?
Yeah, especially on the street that just burned down.
Yeah.
All right, well, thank you, everybody, and best of luck this tax season.
Take your time.
Look to your left and look to your right.